For decades, Canada has been deeply intertwined with the United States through trade, investment, and shared economic interests. The U.S. remains Canada's largest trading partner, with nearly 75% of its exports heading south of the border. However, recent political and economic shifts in the U.S., including growing protectionism, right-wing populism, and uncertain trade policies, raise an important question. Should Canada begin diversifying its trade partnerships, particularly with China and other global markets, to reduce its dependence on the U.S.? The changing face of American trade policy. The United States has long been a champion of free trade, but this stance has eroded over the years. While former President Donald Trump's America First policy introduced tariffs, trade wars, and a renegotiation of NAFTA into the USMCA, United States-Mexico-Canada Agreement, these shifts were not anomalies. The U.S.'s growing conservative and right-wing political movement, often skeptical of globalization, suggests that protectionist policies may persist beyond Trump's presidency. The rise of figures like Ron DeSantis and the increasing influence of nationalist economic policies among Republicans suggest that tariffs, restrictions, and a prioritization of domestic manufacturing will continue shaping U.S. trade policy. Even among moderate Democrats, there is growing skepticism about free trade agreements, with President Joe Biden maintaining many of Trump's trade barriers, particularly toward China. This trend is problematic for Canada, which relies heavily on stable and predictable trade relations. Future U.S. administrations, regardless of political alignment, are likely to prioritize American industries over foreign suppliers, leading to more trade disputes and economic uncertainties for Canada. The case for trade diversification. Given these challenges, Canada must reconsider its trade strategy and look beyond the U.S. for economic growth and stability. China, despite its own political and economic complexities, remains an attractive trade partner due to its vast market and growing technological advancements. Canada's exports to China, particularly in agriculture, energy, and raw materials, have grown substantially. However, relations between the two nations have been rocky, with diplomatic tensions over human rights issues and past political conflicts. Beyond China, Canada should also deepen trade relations with the European Union, Japan, India, and Southeast Asian nations. The Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, already provides Canada access to dynamic economies in the Asia-Pacific, while the Canada-EU Comprehensive Economic and Trade Agreement, CETA, strengthens ties with Europe. Expanding these partnerships can mitigate risks associated with over-reliance on the U.S. challenges and risks of moving away from U.S. trade. While diversifying trade makes economic sense, fully disengaging from the U.S. is neither practical nor beneficial. The North American supply chain is deeply integrated, particularly in industries like automotive manufacturing, energy, and agriculture. Attempting to replace the U.S. with China or other partners would require extensive restructuring and could face significant geopolitical hurdles. A balanced approach to trade policy. Rather than disengaging from the U.S. entirely, Canada should pursue a balanced approach that strengthens alternative trade relationships while maintaining a strong but cautious economic partnership with its southern neighbor. This strategy would involve reducing overdependence on the U.S. By investing in trade agreements with emerging markets, Canada can create a safety net against potential U.S. economic disruptions. Strengthening economic ties with Asia and Europe. Canada should actively enhance its trade agreements with the EU, CPTPP nations, and India, ensuring long-term economic resilience. Pushing for fair trade with the U.S. instead of passively accepting U.S. protectionist policies, Canada must advocate for fair trade agreements that ensure stability for Canadian industries. Investing in domestic competitiveness. By fostering innovation, infrastructure, and manufacturing capabilities, Canada can reduce reliance on any single trade partner while strengthening its global economic position. Conclusion. The evolving political landscape in the U.S., marked by rising protectionism and right-wing conservatism, signals potential economic risks for Canada. While disengaging from the U.S. entirely is neither feasible nor desirable, Canada must take proactive steps to diversify its trade partnerships. Strengthening economic ties with China, the EU, and other global markets will provide long-term stability and growth, ensuring that Canada remains resilient in an unpredictable global economy.